million kilometers from the sun, and at this distance the sunlight is so faint that it's at the limit of where a solar-powered spacecraft can function. Lucy's panels had to be that big, or else it wouldn't be able to keep itself powered, which is why it was such a problem when, just hours after launch, NASA realized that Lucy's panels had failed to fully open. Due to their massive size, these panels had to be folded up during launch to allow the craft to fit inside its Atlas V rocket. Upon reaching space, however, motors were meant to activate, pulling at lanyards that would deploy the solar panels, unfolding them like two massive sails. However, while one panel fully extended and latched into its open position, the second panel never latched open.
That means that they think interest rates are going to rise?
Somehow failed to fully deploy.
That's the only thing I can see there.
Although Lucy had cameras, none of these pointed at the spacecraft itself, so scientists had no idea what had gone wrong, or even how far along the second solar panel had unfolded, making finding a solution that much more difficult. There was also time to consider. Lucy would need to solve this problem before it got to the Trojans, or before it performed any of the massive thruster burns that would be required for its journey, or else the unattached panel could bend and snap, and Lucy could run out of power, spelling an end to the mission.
Last couple days, I guess you could say trading days. Let's put it up.
NASA started looking for clues. They started with the panel's power production. By looking at how much electricity the panel was producing, they calculated that Lucy's solar panel had to be open between 75 and 95%. This was a good sign. Lucy would have enough power while near Earth. They had some time to fix the issue. But they needed more precise information than this to enact a repair. And it was like trying to find out how many fingers someone was holding up when you were blindfolded. But over the course of the next few months, scientists found a way to do exactly that. By activating Lucy's thrusters ever so slightly, they started vibrating Lucy. Lucy's onboard sensors recorded these vibrations through things like tension readings in its panels, and by checking how these readings fluctuated, they could figure out exactly how far open the panel had unfurled. Sort of like figuring out how many fingers someone had raised by getting them to move their arm and then listening to the sound their fingers made through the air, or more precisely, by recording the strain in the person's arm. It wouldn't be something you could do by ear or touch, but with the right sensors and precise enough computer models, it was possible, and NASA has some very powerful computers. Using this data, they worked out the source of the issue. It had to be an unspooled lanyard, part of the process of pulling the solar panel open. But somehow this lanyard had become tangled during liftoff, and had jammed before completely spooling.
On the situation.
Scientists recreated the problem back on Earth using a model version of Lucy and brainstormed what to do. They now had more accurate data. Lucy's panel was open between 345 degrees and 360 degrees.
So there we go, there's the volume. And can we hear us? Maybe I have the volume down low, let me see. There we go. So the volume is up. Oh, I see, there it is. There we go. Yes, indeed. Okay, just double check. Yeah, there we are. Just double checking the volume. All right, disconnect that. Excellent.
In the end, a middle ground was reached. Over the course of the next several months, Lucy underwent a series of very incremental tugs on its lanyard. Little by little, by using the main motor and the backup motor together, doing bursts and then stopping to make sure nothing overheated, NASA got Lucy's panel to open up between 353 degrees and 357 degrees, almost the full 360. It still wasn't quite latched, but the tension provided by the lanyard was now enough that by August 2022, a full 10 months after launch, NASA was confident that Lucy would be able to complete its high-G maneuvers. Which was excellent timing,
all of South America
because
got
just
hit by the
2 months
sun
later, Lucy would be performing one of those very maneuvers.
it was an X class, not bad. Very powerful.
Lucy
blast.
had by now returned
or
to
not
the
very
Earth.
powerful, but
Its
a
flight plan
strong
had taken
blast
it out
from the
on
sun.
a wide
It blacked out
loop.
all of Europe.
Now it was
Asia.
back.
No,
Lucy would be doing its
wrong.
first major maneuver, a dive into the Earth's gravity well
America.
to give its velocity
radio
a boost.
communications and so forth.
The physics of this is
I'm not sure
fascinating.
how long. Maybe
By
half hour,
entering the
something
Earth's
like that.
gravity from behind relative to its motion, Lucy could use the planet's
They never
gravity
really
to
talk about
increase
things like
its
that.
subsequent
They
velocity.
just kind of let it just all
If,
be.
conversely, you came at it from an angle that moved
All be.
against the planet's motion, you would slow your
Hey,
velocity.
Robin, how you doing?
Lucy would take advantage of the accelerating version of this plan,
Oh, no complaints.
diving
Just
as
doing the
close
webinar.
as 350 kilometers
sat,
to
for
the
some
Earth's
reason,
surface
NASA's
to take
satellite
maximum
thing
advantage
on
of
the
this gravitational
computer, too.
push. But with such a deep dive came additional danger.
Yeah, that's it.
Because
That's
of the
NASA
influence of
that's the NASA
mankind,
satellite.
there are now 47,000 satellites and pieces of
I
orbital
killed it.
debris circling
Yeah, I just
above
turned
us
it
in
off.
space. Lucy would need to safely get past this cloud of potential
off now?
hazards. Of course, space is large, and the odds of hitting something are relatively low. However, they are not zero. The International Space Station
Okay,
had to change
I
orbit
blocked that out.
31 times since
Was it on
1999
long?
to avoid collisions. And with a number as high as 47,000 different objects, it's difficult to track everything.
It's still on.
Just a single missed satellite in the wrong place at the wrong time could intercept
Yeah, let me
Lucy,
see what I
causing
can do
a
here.
catastrophic collision. NASA had to start scanning the skies in the days before Lucy's arrival
Wow.
to get up-to-date
right,
information
let's see if
of
we
what
knock
was now
that out.
there and what might prove a threat. If there was so much
I'm not even
as a
sure why
1
it's
in
coming across.
10,000 chance of something hitting Lucy, NASA would need to change
That's what I
Lucy's
just did.
course. Help came from an unusual source. The newly formed US Space
Yeah,
Force,
all right.
founded
Let me,
in late
let me
2019,
battle with this
had
thing.
started cataloging
Figure out where
and
it's
monitoring
coming from.
objects moving through this area.
Oh, it might be coming
Both
from
groups have an interest in space and the Earth's orbit,
No, stay on the
and
line.
share
I
a
wanna make
mutual
sure it comes
desire for
off.
no big collisions to take place up there. Working together,
It's not
they were able
identifying
to
anything,
plot
but
a
talking
safe
about the
path for
satellite, so
Lucy.
that's okay. But I got to figure out where it's coming
Lucy
from.
crossed our skies on October 16th, 2022. It was visible to observers in Western Australia,
Yeah, I can still
briefly
hear it.
shining more brightly than the International Space
coming
Station
from?
in the sky, before it
Yeah.
passed into Earth's shadow and disappeared from
Oh,
sight.
I know where it's coming from.
For 20
I
minutes,
got it.
it remained
I found
completely hidden from view.
Coming off through another
Then,
computer. There
this
it is.
time over the western United States,
There we are. It's gone now. It should cut out in a few seconds. Here we go. So it should cut off about right now. Yeah. Lucy, that we had that CME hit and it had an effect on. A couple of weeks ago, we've had a couple of blacked out satellites that are kind of important satellites on following different information that we like to see every day. So it's knocked out a lot of it's knocked out some important stuff. Matter of fact, at one point they were a little afraid that it might have affected what do they call it, the new expensive one, James Webb. But luckily it was behind the Earth, so it didn't have an effect. But there was a question mark that it might have had just a little blast effect, just at one point. And Lucy, though, has been offline, and they're really frustrated from that. Lucy's orbits, I'm not sure where Lucy orbits. I think it's like James Webb. It's further out, but it gets in front of the sun and the Earth at times. And so, yeah. So, yeah, really. I hear you. Space news, there was for a long time, and then I'll let you off the phone. But for a long time, there was a lot of financial analysts, or a group of them, that followed a lot of the sunspots and activities. And before quantitative easing, we saw their effects constantly on the markets. Now the quantitative easing, it would have to hit the Federal Reserve itself to stop things going. So anyway, yep. All right, thanks, Robin. Bye-bye. All righty. So a little space news slides into the webinar. It has those effects. The space weather had predicted the predicts earthquakes and so forth. And before the big earthquake outside between Turkey and on the edge of Syria, for a lot of us who follow that math and science, we were like, okay, where is this going to hit? We're trying to figure out. We know we're going to get a big earthquake over the next 24 hours. The question is, where is it going to hit? And the Earth is rotating, and it blasts from the sun. And now light travels 8 minutes to get to the Earth. Okay, so it takes 8 minutes if the sun has like a blast, some type of CME. And what a CME represents is a corona mass ejection. In other words, it's the surface of the sun. It explodes a little, it bubbles, and boom, you get this blast of CME, extra energy, coming towards the Earth that we're not normally used to. We get it every day, but not like at large chunks. And so there are financial people who for decades would follow sunspots and relate it to the activity of the markets pretty well. And then after quantitative easing got going, it's just like everything else Janos and everybody else has talked about, is that the fundamentals are not necessarily influencing the markets as much as they used to. In other words, out of nowhere, after 150 years, interest rates, inflation, government policies don't all of a sudden have that influence on the markets. So, we've seen the blackout across South America. Last Thursday, I guess it was like Friday to Saturday. It gave it, a matter of fact, it exploded on Friday. Some people put a report, some groups that are not involved in space weather, they're into other things, I guess they were like environmentalist type things, claimed that the sun had a part of the sun had broken off. They said it didn't break off; it just bubbled out. It's just a blast that happens all the time. There are small ones and then there are large ones. That's all. So, in this case here, we've just gotten news just recently that Lucy, one of our satellites that we follow, I forget what Lucy does. You may have been hearing more of what Lucy does than I do, but in the sense of, I forget what Lucy does. It's a data collection. I'll find it in a second. Where is it at? And we'll just go back to the markets more in depthly. Satellite, there it is. Lucy satellite is it's a spacecraft, really. It explores the Trojan asteroids population and primitive asteroid orbiting tandem with Jupiter. And we've been doing a lot of in other words, we follow the solar system. We're trying to understand, because there's great influences affecting our solar system at the moment. I've mentioned it here. And obviously we live in the solar system, and we want to know, it's starting to affect Mars now. And Mars is like, I guess it's the same distance as the sun, something like that, 80, 90 million miles away. And so we're kind of keeping track of all these things. But we've started losing some communications with two different satellites that are doing exploration. They're little they're actually spacecraft as much as they are satellites. They're a combination of all of it. And they're not orbiting the Earth. They're going through like the Kuiper Belt, and they go through, they're orbiting around Saturn and Jupiter and Neptune and Uranus and so forth. And those planets have gone, basically all the other planets out from Pluto all the way coming in have been dramatically influenced from what we call the it's part of our galaxy, So end result is that, all right, now you know what Lucy does, and the end result is that somehow or another the report was playing on one of our computers. Luckily, it's not that important in the sense of it's nothing, it's not going to hurt anybody. Let's put it that way right now. All right, now back to our regular programming And what you see there is, you see the dollar index kind of just still hesitating, but the pairs trades, you can see them right there. The pairs trades are doing their classic stuff, just like right here. You're seeing the pairs trades, do a lot more jumping and bumping around than you would think. Since I'm always more of a bear on the dollar and a bull on the different currencies. And you can see right here, we slid into a daily sell. We started breaking down yesterday. This is the dollar index. You can see here we're under it again. But at the same time, the weekly jumped up, which was a little surprising. I guess, from all this pressure, sooner or later it had to jump up. We'll see how that plays out, but that's not a very positive sign. I can tell you that right now. So all these pairs trades are going to be influenced by the dollar. The dollar is going to be stronger. It's going to have more influence over them than usual. And can we relate that to the satellite problems and so forth? I would say yes. I would. Earth is affected by all this electromagnetism, and people are affected by it. And, they can have more influences. At the same time, we have the Federal Reserve coming up with its ideas. We have the Federal, I think Lyle Brainerd is going to be moved over to Mr. Biden's White House, I believe it is, which is a good thing. And they were thinking that could have some influence on the marketplace. So I know it sounds a little odd. There used to be, like I said, there are some markets, for decades, people, have paid attention to the markets through space weather. They just don't realize it was space weather. They just look at the CMEs coming from the sun, or, positions of the sun and other planets in the solar system influencing, in other words, when people say astrology, they make it sound so experimental, but when you are, it would be like saying putting a lead shielding around a nuclear reactor is mysticism. It's a perfect way of really looking at it. Not many people realize that. And that is that, in other words, if the other planets are interfering with the sun's direct pressure on Earth, then what happens is we go into a calm period. And then when they get out of the way, in a sense, they influence it in another way, and people do things here on Earth a little bit different than they normally do. I know that sounds a little odd, but you could all literally, you could relate it to putting lead shielding around a nuclear reactor, and then you don't, see the radiation. And the same thing with planets and asteroids and so forth, depending on their size and where they're located relative to the sun and so forth and so on. So anyhow, that's how we slide into this space news accidentally there. All right, from there we go over to, like I said, the euro, and you can see the euro is, where is that at? There it is again. Let's put the euro up there on J4X. Right there, you see the euro is trying to bounce up a little bit. That's the daily, which is impressive. And over here on Chicago Quant, where's that mousey at? There's the mousey. And right there on Chicago Quant, you can see the euro. What was that? That's the S&P 500. So let's get back to the currencies right there. And there is the euro. You can see the euro is doing the same thing. It's trying to bounce up. It went into the buy yesterday right there. I don't have the little green line. It's still a green line. We're going to steal that green line. Stick it right there. We went into the buy there yesterday. For those that get the spreadsheet, so it's in the buy. And you can see it's giving us a little volatility signal right now. So that shows us that the dollar is losing against the euro at the moment. That's showing that. In other words, strength in the euro means weakness in the dollar. And we're always more of a dollar bear than a dollar bull. At the same time, we're seeing these indices, like I showed you, the dollar index indice itself, having some issues about that. They're not. So money is running towards the euro a little bit, and obviously not the other products. And let's go take a look at the other products and see. So there's the cable. And the cable has been doing the same thing for now 5 days. They've been running towards the cable. You can see that right there. And the weekly is trying to perk its little head up. It's really tightened, as you can see here on the manifold. Let's widen this manifold out so you can get a much more, see the width of it. We're way down in here in the tightness. We haven't seen that since September. We'll show you the September right there where, it was sliding down. We were in a cell. I guess we went into the cell right there. We must have stolen that one, huh? Did we steal that one? Yeah, we stole that one. We just double check it, but there's the weekly cell right there. So let's put that in there. Right there. There we go. And you can see that, that pressure kicked in. It tightened enormously there. We thought we had hit some type of relaxed situation or side action, side chop for about 3 weeks, and then it crushed it even more with it in the cell. Notice the weekly not even the fast moving algorithm could even lift up through that area, through the manifold itself. Couldn't even get through the manifold, let alone get near plus. And then obviously after the bottom developed in here in late September, early October, we started to climb into, we started seeing the fast moving algorithm jump up into the buy. And a week and a half later, the slow moving algorithm joined in. And the fact that it got through the manifold in here right there just told me even if there was more strength coming. And that's, you see it right there. And then, we've gone through this hesitation in here, but notice we've talked about this too. It's like a big plateau in here in many ways. It could be a big bottom for another leg up, just like we think we're going to see with the euro, because obviously we're more. Hey, Timothy! Oh, we're doing fine, Would you like to see a 15-minute chart? I know Robin's been sending you the 15-minute chart over once a day. We're trying to get that set up for you to be able to see it live. We're working on that. It's very expensive to do that, so we're trying to find a cheaper way to do it. And then once we find that cheaper way, then we'll try to offer you a service. Let's take a look at that 15-minute because Timothy likes watching the 15-minute. Let's go there and open that up. If we can find Mr. Mouse again. There it is right there. Whoop, not there. And we go right there, open up workspace, and right there. And what is that? That's the 1 minute. So it's been in a buy on the 1 minute since right here. Oh, no. It fell into the cell right there and then went right back into the one. Ugh. There's a loser right there. So whatever nice victories you had from this nice big run, you gave up half of it right there. Ouch! Well, the short, too, made that nice sell-off. So it's not the worst thing in the world. All right, let's see. Let's get to the 15-minute for you. There we go. For the 15-minute, you wouldn't have taken any of that short solely because it's been in that buy now 15 minutes since like, what is that? 4.5 hours ago it went into the buy and has stayed in the buy ever since. It's just been cruising along on the upside there. Yeah, I can see why it is the bread and butter. Good, yeah. Yeah, it's acting well. It's acting very firm in there. It's acting very firm. So, I think that, this is what cable. And cable's been acting well. We just showed you the daily chart right there. Is that it? No, that's not it. Right there. There's the daily chart. We'll widen that out so you can see it even better. You can see the product's been in a daily buy for, this is the 5th day now. It went into the buy right here, had that nice explosion the next day. They tried to sell it down. It didn't work. Our math said no. And you can see right here, we are minus 0.00008, and now we are 0.00013. Now we're 0.00009. We're very close to getting into the plus side on the weekly. So there's pressure on the upside on this product. You can see it. The daily's been reflecting it, and the weekly is trying. But what a flat line, huh? And the fast stochastic, the only thing that makes me a little questionable about the whole thing is the fact that the fast-moving algorithm here, right here, not stochastic, but it is part of, I use a stochastic to smooth it. But the fast-moving algorithm itself is not getting through the manifold. And that's the disturbing point. In other words, like you see how when it did it here, let's see, last time it was minus like that. Last time the fast moving was minus when it was in that big long sell-off. And notice once it starts to get some grip and gets through the bottom, the negative manifold, and is climbing towards the 0 line, that is really a good sign of strength. You can see how it banging, making highs. Like every 3 or 4 days it finds a way to make highs. And it gets across. And, it stayed in that, the fast-moving one stayed there for a while until we got into this situation. Let's move that line back up like that. You see, once it broke down in here, and the slow one breaks the manifold, it's the same type of characteristic. Tells you that there's weakness kicking out in there. And so when we do our 15-minute, let's go back to the 15-minute for you. So when we go back to the 15-minute chart, the blue or cyan is the fast-moving algorithm, and the green is the slow-moving algorithm. And that's why sometimes the fast breaks down in here. You can see it's starting to break down right there, but you can't get the slow to join in. And then they both jump across, and boy, usually that's a good sign of strength, and sure enough it was. And that's usually the way it works. Now this is good size action we're seeing here. There's some real, some action, a lot of buyers and sellers coming in. The market's getting active. And so the last time we saw that type of activity was literally yesterday in the morning. This is the European and the American market right there, which is good trading hours, So there we are. That's the 15-minute. All right, now we will drift over to, where were we? We were looking at cable. If you have any other questions, Timothy, just yell. We'll put it out there. Matter of fact, while we're live, let's do this for you. Let's see, what do? I'll copy this, and we'll leave it up on the screen live. You'll be able to see 2 more, I guess it is, because it's a 15-minute, and we're 2 minutes away from changing. So then we paste it. Let's see, where do we paste it? I'm going to paste it every time we put it on something. We'll find a spot on the screen so you can see it. So let's see how that looks. Does that look all right? Let's see. It hasn't jumped yet. Let's see. There you go. That jumped. All right. So now let's do this. We're looking at, that's the 15-minute. Now what we do is we go over, that's it. We do this. And then we go over to, we go to the daily we're looking at right there. And we're going to find a way of putting that in there. We'll go like this. Paste. There it is right there, the 15-minute. And then we're going to disconnect it. So it's parked, it's parked underneath the chart. Where is it at right now? It's around here somewhere. That's not it, is it? Yes, there it is. So when we look at currencies, you'll be able to see it trading. We used to do that with the camera for, there we go, like that. And we'll move this up like so. There we are. So we'll just leave that on the screen there for you. As we go around looking at other currencies, you'll be able to see the chart ticking away live. How's that? Is that fun? We used to do that a bunch of years back. We used to do that. We would have the euro trading on the screen live for the whole hour, and you could trade the product for the whole hour. And, live with our math. We'd have a camera aimed at it. There we go. All right, now. So from there, what's the next thing to do? Camera. That's a good question, isn't it? So then, what we do is, let's see if we can just shrink this down a little bit, and you can still see it. How's that? That's not bad, is it? There we are. Now, move that up a little bit. And now let's go over to the Swiss franc. And see, it stays there. And the Swiss, doing the same thing as the euro. It's sliding underneath the sell as we speak. It went into the weekly sell last week. Whereas what's curious was that the euro went into a buy. and is there, and we'll just reemphasize it by taking a look at it right there. You can see it's still underneath the zero line, but then it's had a fantastic run. It went from all-time lows. I think this is the first weekly sell we may slide into since it left all-time lows. The fast-moving algorithm a week and a half later from that low right there in October, which was the all-time low of the euro against the dollar, slid into a weekly buy. And then the slow started to catch up and join in over the next 2 weeks. This is going to be the first time either one of them, well, actually, we've gone into the sell here on the fast-moving algorithm 2 weeks back. And when we go over to, so you see that right there. And then at the same time, when you go back, we go back over to J4X on the weekly. Let's put the weekly in there. All right, weekly right there. Let's see if we can do this like that. And as you can see right there, you see that the same thing. It's got 2 red bars on the weekly. See that right up in there? Same situation where that pressure's been on it. And that's because you can see the fast, this is the stochastics. So the fast stochastic dipped. It dipped there. There we are. And the slow is, pressing down, but, obviously it's pushed it all into a sell right there last week. When the red and the green match up. In other words, when red and green are going down together, below the dashed line, it's a sell, and vice versa. When the green is above the dashed line and we get into a green candle, it's a buy. And then when it's a red candle and broken, it's a sell together. That's the weekly signal off of the J4X, our Manhattan indicator. You see, Timothy says, Doc, how many instruments and or currencies do you actively trade? I could say the euro, the cable, once in a blue moon, the yen, on the currency side. And if someone points out something and they have options, I'll go after it, into other product. I'll try that. I like to use options more than I like naked. Unless intraday, I have no problem intraday trading products, hard delta, but not overnight. And then I always use options with the product, if anything else. And then S&Ps, some individual stocks, and that's my most favorite is probably the S&P 500, and the reason why is because it trades 24 hours, and the options trade 24 hours. You can actually get a decent market in the option contract most of the 24 hours. And that's a good reason to trade any product as far as I'm concerned. All right. And then we follow a bunch of products for a lot of different people. So, we probably follow, we follow all the grains, corns, and some different months even, not just 1 month, not just a spot. Soybeans, we follow those. Let's see. What about exotics? Are they even profitable spreads? There are crazy. You mean exotic currencies? Well, they've become more liquid, I can tell you that. Our math does a good job on it, so I don't have much of a problem with that. And so, it is, the exotics. I used to do a Thursday webinar with Janash, another trader slash webinar person, and that was years ago now. And basically the exotics, we did one on that, maybe 5-6 years ago, something like that, where when the exotics have become very legitimate products, compared to what they used to be, because the central banks keep them all liquid. So it comes down to the individual product. We don't have many people following currencies anymore. Sometimes we did. Most of them are from the southern hemisphere, and they all have the hunger you do, is to see it live. Now we're trying to find a cheaper way of doing it, but at this point in time, most of the currency traders seem to have disappeared. It's kind of interesting. There were times where we were doing, like New Zealand dollar. We were doing South African rand. We were doing, a lot of what would be considered exotics. Trying to think. British pound, yen. Stuff like that. They come back. I think what they do is they seem to trade for 5 months or 6 months, and then they go away and they come back again. It's really odd. But I guess that's the answer to all of it in the end. But we have a lot of commodity guys and gals that trade and follow our math for years. So, and they follow the S&P 500, and they follow gold and silver and so forth. I hope that answers your question there. All right, and at the same time, you can still see. Look at that. The 15-minute broke down in the next thing there. Not yet. It hasn't broken, but it's showing some weakness there at the moment. We've got the fast moving down. Let's see if it's going to do this. Last time a fast moved down, they turned around and ran it back up again. Same thing here. Also, we do have major news coming out. And what do we have? Major news coming out in 23 minutes. So people are probably trying to flatten themselves out more than anything else. That's usually the way it works, too. They flatten out. Let's see. Let's give a. There we are. So. From there, we drift over to. Where did we drift over to? Let's take a look at the. We did look at the Swiss. We were looking at the Swiss. It's breaking down, and dollar is firming up. No. In this case here, it's breaking down, and the dollar is losing against it. That's it. So in other words, they seem to be buying dollars at the moment. So they're trying to jump ahead. They're thinking that interest rates are going to drop. That's what they're basically saying. Here's yen. Yen is going into the weekly. You're trying, and the daily is holding up. It's been a little upwardly action right there. Let's see, Timothy says the 1 minute charts on exotics is a nightmare. Oh, I can imagine. Oh yeah, I would think you'd have to. You know what? If you're going to trade exotics at all, you got to go spatial. Go to tick. It'll make more sense because it collects up. 1 minute is horrible. Go to ticks. Tick contracts. In other words, not contracts because there's not contracts, but ticks. So instead of minutes, go to ticks, and it'll smooth it out a lot more. All right. Matter of fact, that might be the title today of this webinar: is the exotics tick charts outperform. Matter of fact, give me one now that you look at, and we'll put it up on the screen. Okay. File, copy, file, paste. And we'll disconnect that like so. And bring it down. And we'll put an exotic in there. Let's see. As Timothy's starting to figure out which exotic he wants us to take a look at, we will keep on rolling along here. And from there, we jump over to, where are we jumping over to? Let's go like that. We jump over to the yen on J4X. Right there. South African rand against the yen. Let's put that on there now. We're going to fill that whole screen up with it. No, let's first get it on there. And then I'll go crazy. And then I'll go crazy. All right, let's see, right there. Format, instrument. And let's find you what looks like the best Tesla for it. Let's see. So that was South African Rand. So that's let's see, ZAR. Add a symbol. ZAR. Look up. There it is, right there. That was easy. Alright, now what we'll do is we'll go over to here. Close. And there it is. There we go. Let's make it the whole page now. Now there's a fifth. You said 1 minute, so let's do this. Let's put a 1 minute in there. Time frame. Where is it at? Settings. And let's make it 1 minute. And that's obviously you're seeing the 15-minute there. We can go back and forth on this. So there's the 1 minute. Now this is not too bad. It's kind of smooth with our math. So it went into, let's see, let's move this down so you can see the product itself. There we are. So you can see it went into the buy right here. Let's get a line for that. Where the hell's the lines at? Well, right there. Went into the buy where? Right there, which is 2 over. So 1, 2. So it goes into the buy right there. And it makes a nice little run from 741.5 to 7.42. I guess whatever that is in the monies, that's what it is. And then it goes into a sell right there, which is 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. It goes into a sell right there. All right. Let's find that again. So it goes into the sell right there. And it goes down to here. That's 1, 2, 3, 4. 1, 2, 3, 4. So it goes all the way down to there. From there to there. A little bumpy ride. Now let's go to a spatial. And see how it looks on a spatial. You know, a tick chart. And we go to there. Go to there. Let's put in... let's start off with the slowest one, 39. That's a real slice of the tick chart. I should probably make it 1 day too. Oh no, there it is. It's starting to fill in. And as it's filling in, let's see what we can do about adjusting that. It doesn't let us get a hold of it at the moment. Oh, I see why. Okay. There we are. There we are. Put that back there. You can see your 15-minute has climbed back out of that little cell thing. Let's see if we can find the chart itself. Where is it? I guess we have to shrink this down for a moment. Format, GDP, and at that trend, whatever you call it, and we go style. No, it's the window. That's what it is. Here we go. We'll fix this. Format status line. That's it. And bring it down to 2. There we are. So you can see it better. There we are. So you can see here, we tried to get into the cell. Somewhere's around in here. There, guess what? It was right there. And it's failed at it. It's popped back up again. Now here, let's do the same thing. Let's move that. Format. format, status line. There we are. And let's also shift the reference to 1 day, because it's trying to fill in all that data, because it's like a combination of volatility at the same time and bars. So when you put those all together, it makes it even tougher. There we go. Okay, and let's blow that up. And there you are. See how smoother it is with a spatial. Now let's see what the reference is time-wise between the bars. That bar that just opened started at, what is it, 8:16 our time, and that one, yeah. See, this is ticking away. Sometimes it can be there's a whole minute. One was 15, like 20 seconds. Then there is a minute and a half. See how much smoother it is compared to the daily, and you can see the time. This is the beginning of the webinar back in here. Not even it's even. Let's scrunch it up to going back to the webinar. Let's see if we can do this. Well, yeah, there we go. And this will show you what it looked like from the beginning of the webinar today. There's the beginning of the webinar right there. Now you can take a look at your 1 minute chart of it. You can see it goes into a cell here and you get your little weakness. It's much cleaner with our math. And up. Then it jumps into a cell off of this. Very short-lived, because it goes right in the buy back to there or there. You get your pop again. So now that is like a very tight. That would compare. Tick chart gets you in the move early. Yeah, it does. Oh yeah, definitely. And then let's expand it out a little bit even more, in the sense of, let's see, where is it at? Now let's go to the next level of Tesla. My first Tesla I do is 39. And then my next Tesla I do is 63. Here's 63. And you'll see a little bit more smoothing, because there's the beginning of the webinar. Then my next Tesla, let's do this to widen them out for you. You can go back and look at the video. You can go back and look at the video on this. Let's do this. Let's widen that out. There you are. And so there's from the beginning of the webinar right there. And you can see it smooths it out even more. Now my next Tesla from there is 96. So let's put 96 in there. I just lost it. Where are you? Right there. There it is. Let's put 96 in there. That's my third Tesla. So my first is 39. My second one is 63. And my third Tesla, as they get larger, is 93. And there's 93, and there's the beginning of the webinar right here. So it puts you into the buy right there and keeps you in that buy for a while, all the way up to like right there. And we go down a little bit, nothing major, goes sideways more, and then it jumps back into the buy there. Does whipsaw you off of that big spike after that nice buy right there. It jumps up big on the next bar, but then drives it down. And so I don't care for that too much, but it's a very profitable one. There's no doubt about that. It's making money there. Then we go out even further, and we do half a Tesla, which is was it like 189 or something like that? I think it is. Let's see. We do 2/3 sometimes, 283. Let's do 189. And then that's the beginning of the webinar. Was right here. And it goes into a buy and kept you in the buy from 7.41 all the way to 7.42 and change for, what was that, 28 minutes. No, I'm sorry, 18 minutes. And then it kicks into that cell right here, and it catches that ride again down there. And so basically the spatial is so much better. How's that? And so that'll be the title today too. Spatial, let's say, tick versus minute charts, intraday trading, because it's especially on exotics. That's what we'll do. We'll call it that way, the same way you did. We'll call it with exotics at the same time. Exotic pairs, minutes versus ticks. And that's probably like the best way to even look at it, as far as I can tell. Because the exotics, they're not liquid enough to deal with the minute chart. They mess up the minute chart. It doesn't work as well. And it's just just the fact of life, illiquidity. So you need the bars to reflect the volatility itself, or the action in it. So that is, I hope that did you enjoy that? That should be pretty cool, huh? And at the same time, let's go back to the 96 and just let it tick right next to the 15 minute. Right there. And I think I have a better one than the 189. I think I used the 2 something. It's 286, I think it is. 286. It's 2/3 of a Tesla. That's probably this more smoother one. Right there. And you can see, and there's, what we would do is, let's go with the 286 will keep you in a buy. This thing's been in a buy on the 15 minute for this whole time period. So let's see how the 286 looks. I mean, we could basically put in a full Tesla. 286. And there is, you got to figure that the 15 minute went into a buy back in here, so we could really kick it up. We could go with one of my bigger ones to match up to the 15 minute. See if it smoothed it out any. Let's see. I'll tell you in a second. Where is it at? I have them on my charts and I don't pay attention to them as much. The 786. Let's look at the 786. Is that? Oh, okay. Cancel. Let's see. 786. Settings. Cancel. Cancel. Alright, now I go like this. Format instrument. Settings. 786. See what happens there. There we are. So in this case here, there is like European Open. Even then it's not matching up. It probably has to go into one of my bigger ones to adjust for the 15 minute. So now we're going to 18,239. Yeah, you can see, it goes into the buy for there. And we slipped into, did we slip into the sell there? I think we did. Yeah, we did. We slipped into the sell right there. They're all minus. So that was the sell right there. Now let's take a look at it through the eyes of one of my larger ones that match up to the 15 minute. Try this. Where are we at, mouse? Let's go like this. This is 18. No, I think the next one is 1693. That's it. 1693. And let's add some days back to it. That'll smooth it out even more, time-wise. So let's go to 2. Like so. There we go. So where's the start? The start is, that's it. That's better. So the start in the morning was there. It went into the buy there and stayed into the buy all the way to this point here. Went into the sell and then went back into the buy right there. Right there. Or is it right there? No, this one. That one right there is the buy. And it's flirting with the sell again right there as we speak. And it has 1,052, now 1,048 ticks to go. So. Oh, yeah, fib. Yeah, you can, take the top of this. Our algorithm has Fibonacci built into it. Would you believe that? Our math, as far as I can tell, our math is measuring physical space that Fibonacci you see Fibonacci and everything in physical space. And as far as I can tell, my math is a form of mathematics that's before Fibonacci. So in other words, I went back far enough. I was using what's her name? Lisa Randall's research from Harvard on expanding galaxies, where they you have a new galaxy about every 36, 37 million years, and so I was living in Princeton, and I went to a lecture she was giving at the physics department, and so you had the IAS people and Princeton University people and so forth there, and I took her research that night, looked at it, and put my math into it, and it predicted the thermodynamics of an expanding galaxy before her work does, and so now the spirals usually shows that work. But my work showed it before the spiral showed it. So I have to assume that my math is ahead of Fibonacci. I see it all the time. It's always, whenever you use my math and then you look at the Fibonacci lines, you can see it when we go into the daily charts. Let's do this. So we go, let's leave these two up, and let's move this up a little bit. And so when you're looking at a daily, let's go to the cable. So there's the cable. Right? We have two cable products underneath it at the moment. So we have this one right there, and then we have this one right there, right? And then, let's see, how do we do this? So what happens is that this one doesn't have Fibonacci on it. Usually we have, like the way I look at the Mexican peso. Let me just use it as a quick example. Here is, let's use the Mexican peso as an example, because I have the Fibonacci sequence on that one because I watch it through that. So here we got it there, so we don't have to show you the two charts ticking for the moment. So here is the 161. This blue line right there is the 100. So in other words, I'll light it up. You can see them there. Okay. And then the black is the 161. And I'm sorry, that's it. It's the 0.76, and then the white must be the 1. Where's 1? So there's 76.61 half, 0.382, 0.76 right there. And then, I guess what is it? I thought there was a 1 in there. And so then what happens, I take the top end of the range of the product for the last 3 years, or 4 years, something like that, or 5 years, what it is. And then when we tighten this up, you can see my work goes into a buy here, and then we start to climb and we hit the Fibonacci sequence. Notice my math starts to turn down first before the Fibonacci. Well, no doubt that it hit the Fibonacci sequence for 3 days. It starts to turn down. It jumps back into a buy right here with the volatility signal. But notice it's banging against the Fibonacci, but notice our math tells us that is breaking down. And so then, breaks down here, or in this case here, you see the 1.61. Our math is telling you that it's turning up right there. So you notice that our math is ahead of the Fibonacci sequence in essence. Does that make sense to you? Do you think I'm interpreting that right or wrong? Would like a second opinion that someone who pays attention to Fibonacci, but that is the whole game of it, I guess you could say in the end. So, but that is that. When it comes to understanding the action in these products, we're going to get that news in a few minutes. But this has turned into a really good currency conversation: ticks versus minutes, exotic pairs trades versus I guess what they call the majors. You know how they always like to call, that the like British pound and so forth is the majors. That's what they call them. All makes sense to you? And so let's go back to that. And what we're going to do is we're going to put up, no, I didn't mean to do that. Go like that again. And then shift that again like so. Oh, look at that. They slammed that down. What are they doing to the stock market? Let's see what they're doing to the stock market. It looks like they're taking it down. The stock. No, that's not the stock market. There's the stock market right there. See, that's a 1680.93 now. Now you know what I'm watching. Looks like they took it down, didn't they? Yeah, they took the market down on the news. So there's the news right there. And they sold them down, and they tried to bounce a little bit on the upside. Let's see if they take them back up again. This is the 1693. I designed the math to fight the Higgs boson back in '77. You know, I was anti-accelerator, so you know, a lot of us in the physics side were really frustrated by them using accelerators. I was using an accelerator. I used the one at Princeton, and it was a it was a nice little machine. And I used the same. They had the same one in Kent too when I went to school in England, and I used it. I went down to Kent also at the same time, and would use that accelerator, but not for the same reasons they used it. I used it differently. I used it more like Feynman. I used it trying to understand to modify the standard. That's what it came down to, and they seem to have codified it in '82. So, but I designed my math to interpret the Higgs boson. So, alrighty. The news came out. January CPI was up 0.5% actual versus a 5%. It was that's what the estimate was too. So it came out with what they expected month over month. A lot of internals that scared them, I think. That's what knocked down the stock market a little bit. And you can see it here. Now we're making new highs again. And you can see, now this is a good one because you can go to this video and you're going to see it goes into the buy here, and we're going up in value. At the same time, you can see your currencies that you're following right here. Let's widen them for you a little bit, like that. There we are. You can see them right there, and right there, and right there. There we are. Matter of fact, if you notice, neither of them could get knocked down. Let's see if we can move this over to here like that. You can see here, where's Mr. Mouse? Right there. The 15-minute is still holding up, even with the damage that was done with that big slide down in the beginning. You can see the spatial never broke down either. And this is the one I used for the one up top here. This is 1693. That's the one I used there. So that is that. All right, traders, we are out of here. Timothy, we haven't forgotten you. We're working on it. Maybe it may come down to using a camera aimed at the tick chart, and you can tune into that. And I think that might be part of the answer in the end. So we might go from there. All right. So, in other words, you won't have much control over it, but you'll be able to see it ticking away all the time because we'll have a camera aimed at it live. News are usually bent, and not the truth. All right. Anyhow, traders, this is Doc from North America. We will catch you all same time, same channel tomorrow, which is Happy to Hump Day. And us traders in the States here are getting excited. It's Washington's birthday, so the markets are closed here in the States on Monday. It's a 3-day weekend when it comes to traders. So usually I go to Florida and play golf, but I don't do that anymore. I can wrestle alligators. Back when I was young, go wrestle alligators and play golf, but not anymore. So nowadays I'm just hanging out around here playing on my farm. So this is Doc from North America saying happy trails to you until we meet again. Happy trails to you, to all our trading friends. All right, traders. Ta-ta for now.